and welcome to the Business Standard Morning Show. I'm Kanishka Gupta. It's the 6th of July 2023 and here are the stories for the day. What are the changes that GST needs? What does Google's fintech hub mean for Gift City? Is it time to sell mid-small cap stocks? What is Cape Town Convention Bill? One of the hallmarks of reform is that it reduces or even eliminates long queues. Goods and Services Tax or GST, which marked 6 years of its birth on July 1st, cut the serpentine queues of trucks at checkposts dotting the country's state borders. After the inevitable teething troubles, GST has put in place a well-oiled tax ecosystem. In June, GST revenue collection stood at 1.61 lakh crore rupees. With this, the monthly GST collection has been over 1.4 lakh crore rupees for 15th month running. So can it be called a good and simple tax now? Or there is more to be done? Tariq Ahmed finds out.
All political parties, all state governments have spoken in one voice. And I think it's a historic day as far as Indian democracy is concerned, because for such a legislation also to be passed unanimously itself augurs very well for Indian democracy.
GST has indeed augured well for the country. Rolled out at a special midnight session of Parliament on June 30th, 2017, it was touted as the biggest tax reform the country has seen since independence. The objective of introducing GST was to simplify the tax structure, reduce tax evasions, and to bring unified tax rates across the country. 6 years on, GST is still evolving. It has come a long way from where late Finance Minister Arun Jaitley had left. The GST Council has made several amendments to improve the process. Since its implementation, the GST Council has held at least 48 meetings and several changes have been made over the years, such as introduction of e-way bills and e-invoice. The average monthly collection has gone up from about 89,000 crore rupees during the 8 months of 2017-18 to 1,50,800 crore rupees during 2022-23. The revenue from GST has gradually increased, and now in the last 15 months, it has been consistently above 1.4 lakh crore rupees. Last month in June, the GST revenue stood at 1.61 lakh crore rupees. But there are several challenges too. A special drive by tax officials found about 60,000 suspicious entries, and out of that, 11,000 entries were found to be bogus. It is estimated that tax evasion amounted to around 20,000 crore rupees in 2022-23. GST was supposed to simplify the tax structure in the country, but the 4-tier tax structure of 5, 12, 18 and 28% has been a challenge for the taxpayers. Experts have pointed out several gaps that need to be addressed.
The National Council for Applied Research on Economics had come out with a report which said that 15.5% is the revenue neutral rate. However, when GST was brought in, it came out with 4 rates, 5%, 12%, 18%, 28%. And maybe at that point in time, that was the need of the hour. But I remember late Shri Arun Jaitley, our honorable ex-finance minister, mentioning that the attempt will be to move towards 3 rates and maybe thereafter 2 rates.
Petroleum products were not included in the GST ambit when it was rolled out, and it is still not there. Once included, it would give a big relief to consumers reeling under high fuel prices. Union Finance Minister Nirmala Sitharaman had in February this year said that petroleum and gas will be brought under the ambit of GST once the states agree.
Some of the gaps, I think the biggest one probably is the excluded sectors, which is oil and gas, real estate and electricity, because of which the credit chain, the ITC chain is still not seamless, because industry or taxpayers purchasing these commodities do not get the GST credit. Also, under the GST provision, there are specific denial of GST credit on some transactions like immovable property. You do not get the credit. It could be samples, gifts, uh, etc.
Experts also call for the need of creating an independent tribunal for looking at the complaints that come under the GST system.
6 years down the line, the GST tribunal has not yet been constituted. For the listeners, I'll just simplify this thing that any issue that you have when your assessment is carried out or audit is carried out, it is carried out by the GST officer. GST officer issues you a report. If you're not happy with it, the report or the order, you make an appeal to the commissioner level. That's the first appellate authority. The first appellate authority issues you an order in appeal. If you're not happy with that, you typically appeal to the tribunal. Now, both the GST officer and the GST commissioner are revenue authorities. And therefore, there is an apprehension that they may be biased towards the revenue while deciding on the order.
What else can be done to improve the GST system?
From a technology standpoint, I think if the government can provide APIs for downloading of the GST notices, which companies receive in different states, APIs for verification of e-invoices. Also, currently in return filing 3P, if you have issued credit notes, which is more than your actual supplies in that particular month, 3B does not take negative values, which causes a lot of problem. If that can be rectified. Last but not the least, I think if the government can come out with a white paper on the gray areas that different industry sectors face.
The GST system has increased the tax revenue of the government. However, despite the achievements of the past 6 years, the GST system is still a work in progress. Experts suggest that the 4 brackets should be reduced to 3 or 2 for the ease of the taxpayers. There is a need for setting up an independent tribunal to address the complaints related to the GST system. Experts also added that there is a need for upgrading the technology for filing and verification purposes.
In April, when GST collection had touched an all-time high of 1.8 lakh crore rupees, Prime Minister Narendra Modi called it a great news for the economy. Meanwhile, in another good news, Google recently announced to set up its global fintech operations center at Gift City in Gujarat. CEO of the internet giant Sundar Pichai told this to PM Modi during his recent US visit. So what does it mean for the Gift City and also for the country? Tariq Ahmed speaks to experts to bring you the answer.
The Gujarat International Finance Tech City, popularly known as Gift City, is getting so many takers that it is forced to expand the project area to more than thrice its current size. This is the first major expansion since the foundation of the Gift City was laid on the banks of Sabarmati River in Gandhinagar in 2007. From 1,065 acres, it will expand to 3,365 acres now. But what is Gift City? It is India's first operational greenfield smart city and international financial services center. It provides several tax benefits through its International Financial Services Center or IFSC. The aim is to attract both domestic and international investments, and the vision is to build a truly global fintech hub. And it is turning into reality. Gift City is now home to 23 international banks such as JP Morgan, Barclays, and HSBC, and 35 fintech entities, 2 international stock exchanges with average daily trading volumes of $30.6 billion, and India's first bullion exchange, IIBX. And recently, the project got another shot in the arm. During Prime Minister Narendra Modi's US visit, Google CEO announced plans to build a global fintech operations center in Gift City. It may well be a big step towards GIFT City's vision of becoming a major international financial center. Google is seeing India as the leader of fintech because of the UPI and Aadhaar. Currently, almost 40% of the real-time digital payment in the world is happening in India. And Google is planning to build on that foundation to take the technology worldwide. Google has already announced an investment of $10 billion under the name of India Digitization Fund for the next 5 years. Also, experts see this as a huge opportunity for Indian engineers.
Global FinTech Operations Center is typically a facility that provides support for operations of FinTech companies around the world. So it could be the biggest one for Google could be GPay itself. I mean, so supporting GPay globally, its operations globally could be one. Or it could also be another angle, which is the Google Play Store's work with all FinTech companies around the world. The operations could be centralized out of GIFT City. So what are those kind of nature of services? Typically, it could be customer support, it could be data analytics, it could be fraud prevention, it could be maintenance mode, it could be product development. It could also be a lot to do with maintaining the products and services on the Play Store. So which means that the ability to generate direct employment, additional employment in GIFT City will increase now.
India has been at the forefront of fintech innovations. So given that UPI has been the pioneer in the real-time payment system globally, it has given a lot more confidence to global companies to set up their core operations over here. And GIFT City, obviously, the Gujarat government has enabled GIFT City to be a lot more proactive, a lot more reform-oriented, a lot more fast-forward, and an overseas operations, right? Instead of having Mauritius, Netherlands, Guernsey, British Virgin Islands, Delaware, we have our India overseas operations now. And this will allow global companies to think about setting up their shops over here, setting up their operations over here, hire talent over there. So that's definitely going to be a large outcome. Will Google be operating their all global operation out of global fintech operation out of GIFT City is still to be watched out.
Currently in India, 35% of the total UPI transactions are done through Google Pay. Google Center at GIFT City will be an impetus for Google Pay to increase its share of transactions in India and expand its services to Southeast Asia and beyond. So what does the Google FinTech Operations Center means for GIFT City?
One, very, very clearly, global visibility for GIFT City. I mean, I'm not saying that it has less visibility, but it will only enhance its pride and prestige, saying that Google has trusted it with its global support team based out of GIFT City. That's one. Two, the ability to attract newer base of knowledge workers in GIFT City. GIFT City has been today having mostly financial services base. But with this, what could change is new set of experts who are working on artificial intelligence, Web3, data sciences. All of them could actually join if they join the Google Center. So suddenly GIFT City is going to have about 10,000 people working on these new cutting edge global tools, which is a great one for it. The DPIs, for example, in India have been phenomenal, right? Aadhaar, Cohen, UPI, all of these have been fantastic DPI on which the private industry sector has innovated and built mass digital innovations. And I think, imagine if we can actually export this to the world. I mean, one, it's not just about only additional revenue, but also for the country as a strategic service in trade, global trade and commerce. So I think GIFT City would actually benefit from being the hub for innovation and development of some of these DPIs that could come in there.
So clearly, Google's entry into GIFT City is a shot in the arm for the project and for the country too. In future, when India will be exporting digital public infrastructure or DPI technology like UPI, GIFT City may turn out to be an important center.
Meanwhile, India took a big leap in global trading this week on July 3rd when popular SGX Nifty, which has rebranded itself as GIFT Nifty, started trading at GIFT City. Moving on, stock prices of mid and small cap companies have inched up sharply during 2023 as investors turn to their favorite go-to destination to make a quick buck amid improving market sentiment. However, the sharp run-up is now making analysts cautious on these two segments. In our next report, Puneet Wadhwa talks to market experts to decode the road ahead for the broader markets.
Investors' most preferred pockets, the mid and small cap stocks, have been at the forefront of the market in 2023. The S&P BSE Mid Cap Index has surged about 14% in H1 CY23, while the S&P BSE Small Cap Index has gained 13%. The S&P BSE Sensex, in comparison, moved up 6.4% during the period. Stable macroeconomic conditions and liquidity flow has seen these two segments post turnaround performance in H1 CY23 as compared to CY22.
Mid cap and small cap rally is here to sustain. One is obviously the flows have been pretty strong, especially from the FI side and the domestic mutual funds. So both have been buyers in the market basically of both mid caps and small caps to a large extent by the mutual funds. So one is obviously flows. Secondly, basically economy is doing well. India is a very good place to be in at the moment. So I think all these things are driving, and we have seen historically when the economy does well, the mid cap and small cap actually outperform and do much better even fundamentally.
Among individual stocks, Nucleus Software Exports, JBM Auto, Orion Pro Solutions, Jindal Saw, Titagarh Rail Systems, Patel Engineering and Jai Bharat Maruti doubled investors' money during H1 CY23. According to G. Chokalingam of Economics Research and Advisory, valuations of all three segments, especially small caps, are no longer attractive. History suggests that small caps correct sharply once in 3 years due to relatively rich valuation compared to large caps and general profit booking. As an investment strategy, Gaurang Shah of Geojit Financial suggests investors remain stock specific.
I think justifiably run-up will be there because earnings will start looking better. But you have to be extremely, stock-specific and sector-specific. You cannot bet on anything and everything and expect to make money. I think autos, metals, FMCG, IT, banking, NBFCs, cement. These would be including healthcare related. These offer tremendous amount of value, but need to be extremely careful. More so in the small cap universe.
Overall, analysts suggest investors remain cautious on the markets and especially the mid and the small caps. Going forward, corporate earnings, progressive monsoon, central bank policies could trigger volatility in the markets. On July 6th, stock-specific action and global trends will dictate the trend amid lack of strong triggers.
He's making plans for an early retirement. Business Standard.
The stock of Interglobe Aviation, which runs the country's largest airline, Indigo, has rallied 55% in the last 1 year, and its market capitalization topped the 1 trillion rupee mark last week. But not all airlines are soaring so high. Go First was recently grounded, and its lessors had moved to take back the possession of the aircraft given on lease. The Cape Town Convention guaranteed this, but their request was put on hold as India has not ratified the treaty yet. In today's Decoded segment, Rimjim Singh tells more about this global treaty.
The Delhi High Court on Wednesday allowed aircraft lessors to access planes they had leased to Go First for inspection and maintenance, but the lessors will still not be allowed to repossess them. The airline has filed for bankruptcy. Go First lessors have filed over 50 requests to reclaim aircraft for missed payments, but Indian bankruptcy law imposes an asset freeze. It would not have happened had India ratified the Cape Town Convention. Cape Town Convention is a global treaty that guarantees the right of lessors to repossess aircraft's engine and spare parts in the case of payment defaults. Adopted in Cape Town in November 2001, it was designed to increase financing and leasing of aircraft by reducing risk they face. India is a signatory to the convention, but it is yet to be ratified by the parliament. So the country's laws, including its bankruptcy laws, have primacy over the convention. To reassure the lessors, the government has started to rework the Cape Town Convention Bill. It is reportedly planning to table the Cape Town Convention Bill in the monsoon session of the Parliament. The move is aimed at making the process easier for aircraft leasing companies to seize the planes of airplanes that miss rental payments. The proposed bill will give primacy in the Cape Town Convention in case of conflict with any other local law, mainly the Insolvency and Bankruptcy Code (IBC) of 2016. People working on the draft bill said that it would make it mandatory to return the aircraft to the lessor between 2 months from the start of the bankruptcy process. The recent Go First crisis has led to an international body representing aircraft lessors to give a negative outlook on India. The UK-based Aviation Working Group has said that the country remains on the CTC compliance watch list. Worried lessors also filed for deregistration of 6 aircrafts with SpiceJet, which has defaulted on lease rentals. Usually, insolvency resolutions drags on for a long time, and the lessors are unable to recover the aircraft. Data from the Insolvency and Bankruptcy Board of India shows that till December, as many as 610 cases have been resolved under the IBC, with an average time taken more than 600 days.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Aircraft lessors have suffered before too when Jet Airways underwent insolvency proceedings and also when Kingfisher Airlines went bust. Well, that's all for today. For more news and analysis, please log on to business-standard.com. If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.